Did you know that when buying a home, there are 4 different types of mortgage lending institutions that you can choose from? Stay tuned for this episode of More About Mortgages because we're going to dive into all 4. Thanks guys for joining me for another episode of More About Mortgages. My name is Ian Moore and I'm a loan officer here with Premier Mortgage Lending. I appreciate you joining me here for another episode, and if you haven't, please make sure to like and subscribe my channel, More About Mortgages, because again, we are hosting a competition and a contest coming up soon, and if you haven't registered or subscribed yet, you won't be included in it. And let me tell you, you're not going to want to miss out on this. So diving right into today's episode, guys, there are 4 different types of mortgage lending institutions out there that you can choose from when you're buying a home. And we're going to dive right into option number 1, depository banks. Depository banks, guys, you've seen them everywhere. Every main street or main road in your city or town has a Chase Bank, U.S. Bank, Bank of America, Citibank, TD. Those are depository banks. They hold people's deposits, they hold CDs, retirement accounts, and they have a number of different facets that they operate within one institution. So they're not just mortgages, they do all sorts of financial service. They like to do conventional loans as far as the mortgages go with higher FICO scores, more money down, and you need to fit into a smaller box qualifying wise in order to secure financing to buy a house through a depository bank like a Citi or Bank of America. They do purchase loans only. No refinances really with these big depository banks. I would even throw credit unions, your local credit unions, into a depository bank. Depository banks, guys, I will say are good for jumbo loans or portfolio loans. Portfolio loans, guys, are, if you don't know, are loans that the depository bank or that lending institution will fund themselves and service themselves, meaning they're not selling that mortgage on the secondary mortgage market. They don't need to sell it to Fannie Mae, Freddie Mac. Therefore, they don't need to include all these loan level price adjustments towards their interest rates, because Fannie Mae, Freddie Mac, FHA for government loans, VA for government loans, USDA for government loans, they all have criteria for pricing, meaning if they're going to be buying loans on the secondary mortgage market, they're only going to be buying loans that fit their criteria, that have the loan level pricing adjustments built and caked into those rates. And if it doesn't fit all of these and check all those boxes, they're not going to buy it. You don't want to have a loan that they're not willing to buy on the secondary mortgage market if you're not a depository bank that originated that loan as a portfolio loan. You don't want that, guys, because then you're stuck with a loan you can't sell and you're going to lose a lot of money on it as a regular lending institution. But as a depository bank that originates portfolio loans, they can do these. The downside to that, their service is a little bit lacking compared to some of the other 3 lending institutions that we're going to get into here in this episode. But they close at 5, if not before that, during the week. They're not open on weekends, and a lot of times you don't get the same loan officer that you speak with on a day-to-day basis. It's different people that you're speaking with from that financial institution, some of whom may not even have any idea what's happening with your loan or your purchase transaction. Loan officers that work in the mortgage department of these depository banks, they don't need to be licensed. Mortgage lenders and mortgage loan officers at the other 3 lending institutions, they need a regular yearly license. They need to pass an exam in order to become licensed. That is an extremely difficult exam that's equivalent to the real estate exam. And we need to follow that exam up with yearly continuing education of at least 8 hours or more continuing ed every single year, because in this business, it's always changing. There's new information every single week, every single day, new regulations coming out, and you need to stay up to date with what's happening in that realm. And unfortunately, loan officers at banks in these depository big banks, they just do not need to do that and adhere to that same criteria and the same educational standard. Just like any mortgage lending institution, they don't want early payoffs, they don't want defaults, loans going into default, so they're going to do everything they can to try to hinder against that. But at the end of the day, for somebody that's purchasing $1 million home and has a really high FICO score, using a depository bank may not be the worst decision for their mortgage loan. However, get at least a second quote from one of the other 3 lending institutions, guys, because I can tell you just from a service standpoint and speed standpoint, you may not be super pleased with using a depository bank to secure traditional financing to buy a home with. Lending institution number 2, mortgage banks. Mortgage banks are a big one, guys. You see them out there. They're the SunTrust, the Rocket Mortgages, the Loan Depots, the Citi Mortgages, those types of institutions out there. Brick and mortar locations a lot of times. They fund and service a lot of their own loans, and they're only in the business of originating mortgages. So they can close faster than a depository bank, because depository banks, like we talked about, they have CDs and IRAs, retirement accounts, checking and savings accounts. And when they close somebody's home loan, they're also going to try to cross-sell them on getting a bank account, opening up a retirement account with them, checking account with them, and start investing with them, the whole nine. With a mortgage bank, you're not gonna see those cross sales. You're not gonna experience that or have to go through that. You're gonna get your mortgage loan. You're gonna have a few more options than you would at a depository bank, as far as this mortgage bank being able to offer VA, USDA, FHA, instead of just conventional loans with high FICO scores and high down payments. They might be able to provide you a little bit more options and alternatives if your financing doesn't call for a very straightforward conventional loan, putting 20% or more down. The lending institution type number 3, direct lenders. Direct lenders, guys, like a Wyndham Mortgage out there, American Home Loans, Elixir Mortgage Lender, Landmark Mortgage Capital, Key West Lending. These all types of mortgage lenders out there, guys, would fall into the category of direct lenders. They have a lot more control over the process. They're in the business of lending only, similar to a mortgage bank. Mortgages is all they do. Home loans, purchase, refinance, primary residence, investment, second home, 1 to 4 unit residential properties. They can lend on it, and they can put you ultimately into a mortgage loan that fits your budget, fits your goals, and whatever you're looking for. And since they fund a lot of their loans with their own money, they don't have to worry about selling them on the secondary mortgage market. Can close fast and not have a ton of pricing adjustments built into your interest rate, which could be good. And because they're in the business of only mortgages, they're quick, and their customer service will be a lot more advantageous than it would be using a depository bank. So, depository banks, mortgage banks, direct lenders. Those are the 3 lending institutions that we've discussed so far. And to move on to the 4th and the final mortgage lending institution, mortgage brokers, guys. And in my personal opinion, brokers are the best, and ultimately provide the consumer with the most value and the most advantages out there, because we can shop for you. You don't pay mortgage brokers a single penny. However, they can take your either purchase or refinance criteria and shop it with different wholesale mortgage lenders out there to try to find you the best possible interest rate with the fewest possible costs, so that you can get into your new home or refinance your current existing loan as smoothly, affordably, and efficiently as possible. So having the ability to shop your loan around 2 different lenders is enormous and provides you with value. And not only that, but mortgages is typically all mortgage brokers do. So they're out there doing residential 1 to 4 unit purchase and refinance transactions, just like mortgage banks and just like direct lenders. However, brokers have the ability to work with multiple lenders, giving the consumer, you guys, more options and more bang for your buck, so that we can tailor your loan specifically to your needs, your goals, and your overall financial situation. And it's not just a in and out type. We're gonna line you up with the best number that matches whatever you're looking for, and we're gonna send you on your way. No, we're very tailored, customer service driven, and we wanna provide you guys with the most pleasant overall experience when you're purchasing a home or refinancing an existing mortgage as possible. And that's what mortgage brokers are about, is providing great service and providing you guys with affordable loans to buy your new home with, or save some money on a refinance, or get some cash out against the equity of your home with a refinance. Either way, the 4th mortgage lending institution, guys, is mortgage brokers. And as you can see on the screens, we've kind of given you some examples of what these 4 types of lending institutions look like. Mortgage brokers, people like us, Premier Mortgage Lending, Cross Country Mortgage, even the mortgage specialists out there, and that's just in New England alone, guys. There's mortgage brokers all over the country, in different parts of the country. And another benefit to using a broker is we have every different type of loan out there imaginable you can think of. We have jumbo loans, we have conventional, USDA, VA, FHA, home ready conventional, home possible conventional, adjustable rate mortgages, and what those look like: 10-in-1 arms, 5-in-1 arms, a 10-in-6 arm. Hadn't even heard of that until last month. Something that even myself, 10 years as a loan officer, picking up new stuff every day, and there's always something to learn in this business that we can then turn into providing more value to you guys as our consumers and our clients. Because whether a loan officer works for a mortgage bank, a depository bank, a direct lender, or a mortgage broker, their number one primary priority in their career should be providing the best possible service to the consumers out there they possibly can. And that means coming in early, staying late, doing whatever it takes to make sure that you guys have all your questions answered, that you're not wondering what stage of the loan process your loan is at. You're not wondering when the appraisal is going to come in and what the value is going to be like. No, you know what day your appraisal is going to come in. You know that it's already been ordered and paid for. You know which day your commitment date is and what that means, what even a commitment date means to you, and then when ultimately you're going to be closing. And as soon as possible, they need to let you know how much you're going to need that cashier's check for at closing if you're bringing money to the closing table. So whether you're a broker, a bank, depository bank, or a direct lender, they need to provide you as the consumer with great service. And whether you choose one of these four, hopefully you're going to be able to find that great service in your mortgage loan officer and lender. So guys, this has been another episode of More About Mortgages on the 4 types of lending institutions out there that you can choose from as a consumer. Please make sure to like and subscribe my channel, More About Mortgages. If you haven't already, guys, I would really greatly appreciate that. And I hope everybody has an awesome week. Stay tuned. I'll talk to you guys soon.